Joe Terranova has done the quarterly rebalance for his ETF, and we mentioned the sales last evening in overtime of Tesla and Microsoft. Well, there's another biggie that we did not get to yesterday, but we're going to right now. You sold Apple.
Yes, Apple
AAPL.
Apple has come out of the portfolio leading up to this rebalance. I talked quite a bit on air about a lot of the technology stocks that had lost significant momentum, right? The momentum factor is so critical to these names. Momentum is something that I'm trying to recreate. I feel momentum as a single factor is deficient. I feel is very happy, exceeded expectations in doing that. But for Apple in itself, okay, it just could not overcome the fact, quality balance sheet, strong fundamentals, but it could not overcome the breakdown in the technicals. And let me be clear on something, okay? I said this leading into the rebalance. I said that there may be a moment where mega caps come out of the strategy, and then a moment when mega caps go back into the strategy. Let's remember, last January, Apple was sold at around 170 from the strategy. In April, it went back in again at 157. That's the nature of the strategy. That's what it's designed to do. I follow it. I invest in it. Bought more of the strategy this morning.
Okay, so you also sold it within your personal holding too, right? So I think you try as best you can to mirror the ETF strategy in your own personal portfolio as well. So Apple comes out of the Joe T. Apple also comes out of Joe.
Everyone who participates on this show has a different strategy, and I respect everyone's individual strategy.
Right.
Understand my background. You know it well, okay? It's rooted working with Mark Fisher in the commodities exchange. Commodities is momentum-oriented. So I'm a student of momentum, and the endeavor for introducing this product was I wanted my performance to be active and live. I wanted to take momentum and improve upon the strategy within the market, okay? And I'm going to eat my own cooking. So yes, I'm going to move out of a personal holding if the strategy is going to dictate doing that. And I think that's exactly what you should be doing. Look, you did it way better than me back in the day, okay, running a fund, and you know that you have to have the confidence in what the investment methodology is doing. It's reflected in your own holdings.
Overall, you have a modest increase in your exposure to financials. And by the way, you have several moves, and many of them are really interesting, and we're going to sprinkle them throughout this hour.
Okay.
So I want you to sort of stay with us, and we're going to tell you along the way here what Joe has done. Name brands in and out, and in many cases out, which I think you'll find pretty interesting. Increase in financials, overweight energy, industrials, and materials. That represents sort of how we've been talking, but underweight tech, comm services, and discretionary.
The personality of this strategy reflects everything that I've been saying on this desk since the Federal Reserve announced in November of 2021 they were going to be raising interest rates. The personality of this strategy, 25 buys, 25 sales. That's a lower turnover than what we saw last year. Last year, 35.5 was the average turnover. In terms of the overweights and underweights, not much has changed here. The disposition of the portfolio has stayed the same. If you look at the 30-day volatility on this portfolio, it's only 15.8. To have a volatility on a fund that's less than identified as a momentum strategy, and it's below the S&P itself. The PE on this is 16.5. So the character and disposition of this strategy it reflects exactly how I'm thinking about markets.
So since inception, the Joe T has trailed the S&P by a couple hundred basis points, right? It's destroyed the NASDAQ 100. Okay. The NASDAQ 100 since the inception of the Joe T, you're up 14.6%. NASDAQ 100's up 2.76%. S&P's up 16.7%. So, you know, your sector moves are interesting here. Kari, what do you make of this Apple decision and a sale at a time where these stocks, look, these stocks, year to date, Apple's up 10%.